Good morning, dear friends and viewers of our YouTube channel. Uh, Today we have made a video on the special edition of elections versus market, which is a hot topic for next 50 days till the election results, which is to be declared on May 23rd, 2019. So, let me clearly, explain you. We have compared the last three elections, what was the result and what happened to markets. See, for example, if you can see this 2004 general elections, the Sensex levels, if you see, it was around somewhere around 5000. If you see here, it was somewhere around 5000, and post elections, if you see, it has gone up till 6000, 6500. So there's a decent rally seen in the markets. So what exactly happened? So see, 1999 to 2004 it was BJP government, and people were expecting a change. So the market, the elections also came in the favor of UPA, and the market rallied continuously for the next 1 year. So it is a decent return. That's a 40 to 50% returns in 1 year in the index itself. So now you can think it or think of stocks as well. So it's a present decent result. Next, coming to 2009 general elections. Now if you see here in 2009, especially in the month of April, yeah, that's what just after the election results, if you can see, the Sensex was somewhere around 11,000. From 11,000 it went up till 18,000 post elections. That is in a year of time, in 12 months of time, markets has given a tremendous 60 to 70% returns in 1 year post elections. Why? Because earlier UPA was ruling from 2004 to 2009. People were expecting, there were no there were no much negatives for UPA at that point of time, because all the scams were out after 2011 or 12. So in 2009 everything was all right. So that's the reason, I mean, investors are seeking the business, the corporates. They don't want some other government to come and then change the policies, which makes difficult for the corporates. So that is the reason they were happy with the present government. And also 2009, you should not forget that 2009 it was also a recovery time from the great financial crisis in 2008 which happened. So that is also one of the reason why market rallied up. And now coming to 2014 elections, people were fed up of all scams, 2G scam, chopper scam, all sort of scams. There is a list of scams which UPA was involved in for their personal gains, using the political power. So that is where the investors and corporates were not happy. So the entire nation wanted to vote for Modi. The Modi wave started from October itself, and so the Sensex, if you see here, it was somewhere around 23,000 in 2014 April. So post election rally from 23,000, it went up till 28 to 29,000 in a year of time. So that is approximately giving a returns, decent returns of 20 to 25%. So this is how it happened. But now if you see 2019 elections, people are happy. People are quite satisfied and quite comfortable with what the recent developments in the past 5 years. Though there was some negative vibes on unemployment, but however, still, you see, they are doing something good, but they are not doing anything bad. So that should be considered. They might be slow, but they are not doing something bad, and they are not looting the country. This is what investors are saying. There are so many perceptions. If you see so many news channels, they are reporting the same thing. So this is how it works. So what should you need to do? What should you need to do in the sense? See, you can accumulate decent large cap stocks from private banking sector, automobile sector, and cement industries, FMCG, but all large caps. See, I'll tell you one thing. The problem with mid caps and large caps is whenever market goes up, it is a large cap which is composed of Nifty and Sensex. Suppose uh, these all Nifty is containing 50 stocks. Sensex is containing Sensex has is a composition of 30 stocks. So markets is going up. These 30 and these Nifty 50 stocks only are going up. We do not know about the mid caps, but barely elections all depends on the first impact will be on the large caps. Then comes the mid cap rally. Then comes the small cap rally, and that will be the end of rally, you can say. So there is a business cycle of 5 years or 10 years, so there will be one downturn and then uptrend will be there. So generally post elections the market tends to, because investors are getting discounted all the political or the the sentiment of the elections and the sentiment of the political view of the nation. So this is how it is, and pre-election rally there is no much movements in 2004 as well, not even in 2009. So and not no, very less impact in 2014 as well. However, here there were in 2004 there you have seen a huge volatility. So that is how things are changing. So what you need to do is you can go and buy in the market, and please remember at least 50% of your portfolio should consist of large cap stocks. Then only it makes sense, because when market goes up and your portfolio is down, then it doesn't have any meaning. It is better to go and invest in fixed deposits rather in investing in markets. So it should always be aligned with markets, because markets, even though there is a short term fall, in the long term it keeps going up only. It's a developing nation and it always tends to go up. So thank you friends, and have a good time, have a happy investing and make good money. Bye bye.